All right, so let's begin this very interesting discussion. Today we are cutting through the noise in a market that's running hotter than ever. Global headwinds settling, uncertainty, Q2 results and strong expectations for Q3 and Q4 now. How evaluations are looking across market cap, stretched or stable. Retail flows are at record highs. SIP numbers signaling strong momentum. But behind this euphoria lies a far more important question. Is the market's foundation as strong as the trend looks? What's the current fabric or texture of the market? So let's decode all of this. We have with us Sushant Bhansali, CEO of Ambit AMC. Sushant, hi, great to have you on board. And yes, definitely I'll be asking you a lot of questions, but then I want to start with something I'm not sure you want to answer. You're meeting with the FM and the industry representatives who were called and discussed about what should be in the upcoming budget. In a nutshell, if you can just talk about what were the focus points?
Yeah, no, so we are prohibited to discuss in detail, but broadly it was related to capital markets. I think FM has been doing multiple sessions. I think the last 2 days she has done already 8 sessions with various industries. And I was part of the capital markets group with a variety of leaders from capital markets across the country. And I think the broad idea more was to what can the government do as part of the budget process in terms of reforms for the business, both in terms of ease of doing business, as well as how to get in shape the economy from a structural reforms perspective. Tax proposals was not, I would say, something which the FM wanted to discuss. So it was more of non-tax reforms and hearing the industry. And it was more of listening to the industry than, I would say, discussing each of the issues. Each of us presented what are the key priorities from our own perspective. And there were various segments within capital markets group which were represented. So each segment, I think, presented their priorities as to how they look at the economy currently and how can they grow the industry. So that was the key focus area of the meeting.
Absolutely. But then what were your feedbacks or what was the representation from your end about? Because you know the pulse of the investors, you know the trajectory of this entire capital market and its story, you know, the way it's been building up. Definitely in terms of regulator and reforms, we've seen a lot of things coming up. But then what's your focus point or what's the pain point or challenge which needs to be immediately addressed?
Yeah, no, there was no immediate address issue. I think everything was more long-term issues in terms of structural reforms. And I think from our perspective, our focus was more on how to get more money inside the capital markets, both from global as well as local investors. How can we ease processes both for investors as well as service providers in terms of increasing the number of service providers, in terms of increasing the number of clients across domestic as well as global investors.
All right, you know, I'll be discussing on this, but then yes, it's also a time where our investors and our viewers need a lot of guidance from you, because we are almost done with the earnings season now, Sushant, and your overall commentary first I would want on the earnings, and also have pockets of the market started running ahead of fundamentals? You know, how would you like to answer both of these questions?
Sure. I think Q2 results were more in line, probably a bit better than the expectations were. But the expectations themselves were getting muted every passing quarter for the last 4 or 5 quarters. So that way, I think looks like that the earnings have sort of bottomed out in the economy, and we will see a revival from probably Q3 onwards. The management commentary alongside the results was quite positive. I think the rationalization of GST rates has changed the mood suddenly in the whole economy. The festive season was quite good, was the feedback both from management commentary, because it was not that much part of the results, but the commentary did reflected that. As well as the channel checks which our teams and various brokers have done, suggest that the Diwali across the country, along with other festives, were quite good and should lead a revival of consumption in the economy.
All right, interesting. So, you know, what's the texture of the market right now, if I just want to understand that from you? Are we looking at global headwinds fading away, the uncertainty that we were talking about a few months back? You think it's already settled now and we are very strong on our domestic triggers, and that's the trajectory ahead? We are also seeing, you know, buying figures coming from FIIs, although we cannot really guarantee on the momentum continuity out there. But how can you make sense out of it?
Yeah, so I think from a global perspective, anything new which comes will certainly have another effect on the markets, like it has been for the past many quarters. 2025, since beginning, I think lots of global geopolitical as well as global economic situation has been quite tough from an India perspective, and that's the reason why India has underperformed massively after a long period of time against most developed markets as well as emerging markets in 2025. Hopefully, things will be better in 2026, is what we expect today.
All right. So, Shyam, do you see the market, making a shift from growth at any price to growth at a reasonable price? Is that the situation that we are looking at? How would you explain this?
Definitely, over the past few years, I think that has been the trend that growth at any price seems to be an unreasonable proposition to make money long time. And that's where in this, I would say, rally in the last 3, 4 years, we didn't get into such situations, whether it's India or globally as well. As one looks at currently, the theme globally is AI. And once look at and try to compare that with either the crisis before GFC or the dot-com boom. And that time, the valuation multiples were quite insane. If you now reflect back, I think people's memory are still sharp. I think more information is available, and that's why the multiples have not been that crazy in this cycle so far. And our belief is that shall continue to be the case. I think there are more options for people to invest, and everybody recognizes that all these trends get lost over a period of time, and one needs to prepare, and risk management becomes the key priority for most of the asset managers.
All right. Let's also focus on some sectors now, and especially looking at the earnings season. Is India's earnings cycle actually broadening, or are margins in specific sectors peaking out? How would you like to help us understand the sector trajectory and also the fund house calls on sectors?
I think margins are still, I would say, from a sectoral perspective, much better, I would say, in the Q2 results, as we saw. The last few sectors, they were, I think, more broad-based, but still the earnings has been led by a couple of sectors, let's say oil and gas, metals, etc. And if you look at broader trends from a Nifty perspective, bulk of the earnings are coming from these 2 or 3 sectors. But hopefully Q3 and Q4 will present a better picture, and we'll have a bit more coming from few more sectors. Automobiles continue, I think, giving a very good positioning. The GST rate cut rationalization has, I think, the largest impact on that sector. The prices of vehicles have become affordable much more. I think the prices have gone as back as pre-COVID. And from that perspective, while the incomes have grown and the interest rates are coming down. So from that perspective, automobiles, I would say, should be a good sector. And as economies of scale pick in that sector, the margin profile should increase for most of the auto OEMs as well as auto ancillary players.
All right, perfect. Let's also understand India's premium situation over here now. Given India's premium valuation versus other emerging market peers, do you feel the next 12 to 18 months are more about stock picking alpha rather than index level returns? How is this placed in our story?
Sure. So I think two parts of the question. From a premium to other emerging markets, I think India is at almost at the lower end of the premium, which India historically has delivered. If you look at the last 10, 15, 20-year data, I think where the premium compared to other emerging markets is definitely low on the lower end of the trajectory. From a stock pickers market versus broad-based market, I think given the earning profile being concentrated and given the where valuations are, it will be a stock pickers market. It has been a stock pickers market, I would say, for almost a year plus, and might continue for another year or two as such.
Mm-hmm. Got it. Okay, let's just understand the mid-cap and small-cap cycle now. Specifically, your take on the earnings. Small-cap has been slightly muted, but then, yes, select mid-caps we can definitely talk about. What is the sense out here in terms of Q2 earnings, in terms of valuations in some pockets, and overall the picture of small-cap, that you can sense?
Yeah, small caps have been the disappointing side of, I would say, from market cap segment in terms of earning profile. Throughout, I think both even Q1 results were quite tepid, and Q2 results continue to be in the same line. Mid caps relatively have done much better in terms of earning growth. They have outperformed both large caps as well as small caps. And we believe that that trend should continue for some more time. Given that I think the number of stocks in mid caps are also limited compared to small caps, and few of the sectoral bets in the mid cap segment are doing well. So that's why the earnings look so much better in that segment as of now.
And how to navigate the situation in small caps now?
Yeah, small caps, I think they're recovering. I think Q1 was, I would say, worse than Q2 results. Q2 results have been a bit better, but I think a long way to go. I think Q3, Q4, if the consumption pattern revives to continue how the festive season went by, and if that continues, then I think small caps can make a good comeback in Q3 and Q4, and thereby the full year earning for FY26, the earnings might not be that muted as they have been in the first half of the year.
Right. So, Sushant, since you've already mentioned about the consumption theme, let's just focus more a bit on this slightly. We've seen AMCs launching rural consumption funds kind of themes in the market. So how bullish are you on this particular story? How long do you think it's going to sustain, the entire shift from Capex to consumption? Is it Capex and consumption according to you, or it is Capex and then now consumption? What is the theme looking like, which you, according to you, will be working fundamentally, for more 3-4 years in the market now?
So we wrote about this theme, Capex to consumption, just after the union budget was sort of adopted in post the general election result last year. And our view was that given the state of finances of the government and government's continued focus to be on the right side of the path, on the fiscal side, to maintain the fiscal balance. Our view was that government will now shift from Capex side, which they have been doing for the last few years. If you look at pre-COVID, or rather after the general elections 2019, government spent heavily, increased the Capex massively as allocation from budget, and most of the budgetary provisions, I would say, had been met in the last few years. So our view was that given that that has not been able to revive the private Capex cycle, the government might want to now, and also because of the, I would say, not so strong mandate, the government focus will be on consumption side, and that's how things have played out. If you look at in 2025, starting from the budgetary allocations by reducing the direct tax proposals, then getting the interest rates down, and then also introducing more money into the system through fiscal measures. And after that, this big GST cut or GST rate rationalization. I think all these steps seems to suggest that government has been focusing on private consumption to lead the private Capex story rather than trying from the Capex side. So from the next few years, I would say this theme of consumption should continue to do well, and that should lead to a good private Capex story. We have been focusing our sectoral bets to play on both consumption as well as private Capex.
All right. So, let's just talk about your house and your house calls. Are you rotating out of any sectors that no longer meet your quality threshold?
So, from a quality threshold perspective, it's only about right now the focus. I think either companies are quality or non-quality. So we stay away from non-quality companies. We continue to get out of sectors where we believe that the earning growth profile will be muted compared to other sectors, and where like sectors like auto, where we see that good earning momentum will continue. So there will be more weights towards those sectors. So all consumption-like sectors, I think, getting flavor back because our view is that these sectors will showcase a better earning profile compared to the last 2 or 3 years.
All right. I also want to understand how have you increased any cash levels recently, or are you staying fully invested despite valuations? What's the stance or status out there now?
So we have never taken cash calls. Our belief is that investors give us money to be in the equity markets all the time. At their end, they do take cash calls, whether they want to be less equity allocation and more fixed income allocation. So they manage at their end, and our mandate is to be in equity all the time. Having said that, occasionally we might be on cash positions. And if I reflect across our portfolios, in a couple of portfolios, the cash positions are about 8-10%, but that's because we have booked some profits in few companies. and we are not able to find their replacements in a rush. So there might be occasional, I would say, few weeks position of cash of 8-10% in a couple of our portfolios, but nothing beyond that. And probably it's more temporary. And as we find the right set of companies that are level of valuations which we desire, I think that cash will get deployed.
All right, one last question before I let you go, Sushant. I really want to understand your pro tip for the investors right now who are hearing you. And investors, we are talking about people who invest in direct stocks. We are talking about investors who do SIP and invest in mutual funds. SIP book, definitely the inflows are looking very strong every month. And the AMFI numbers also indicate that investors have become slightly smarter in diversifying their money, okay? The flexi caps, the hybrids are really doing good. What's going to be your pro tip as far as their portfolio is concerned, their investment is concerned, their connection with equity is concerned?
Sure. So last 14, 15 months, we have sort of zero returns from markets. If you look at across segment, large caps, mid caps, small caps, some of them in fact have been negative as well. This consolidation phase doesn't continue for a long. I think another probably a few weeks or few quarters at best is when I think we will start seeing new highs in the market. And one should get prepared, start, I would say, getting putting more money at work rather than being on sidelines. If you have made up your mind and you're looking for more corrections to enter the market, I think now is a good time to start entering the markets. Probably you might want to stagger for a few weeks or a few months at best, but one should start getting into rather than being on the sidelines. So that's on the portfolio level in terms of equity. In terms of sectoral bets, as I said, consumption, automobile-linked sectors, I think should do well in near term. But there are other sectors which offer reasonable valuations, and I think from a 2 and 3 year perspective, those sectors, whether it's BFSI, whether it's IT, they offer, I think, good support from a long-term perspective. So that will be, I would say, a summary of how investors should position themselves.
Absolutely. That's a quick takeaway. And with that, it's a wrap. Thank you so much, Sushant, for being on the show today and helping our viewers understand the entire market trajectory. Thank you so much.
Thank you.